Hey everybody, Preston Brent here with our Trader User Group free weekly roundup. This is for the trading week ending February 16th, 2018. What a crazy couple of weeks we've had. We had the fastest, deepest fall from all-time highs without a correction a couple of weeks ago. And now we're getting one of the stronger bounces that we've seen since about 2011. And one of the things that I really want to point out here is that this is the time we've got to be extremely careful. You can see this move down. Typically, all-time highs up here around 28.78.50, there was just no breath. We came in here, and once we took that out, I knew that we were going to have some issues. And then it just took 2 or 3 bars, and boom, we gave it all up. We had one bar down here. We moved up. We came back down. We did a little bit of a retest, but I don't really count that even as a retest. I consider it part of the overall decimation that we had in that week. And then we've got this bounce moving up like this. I'm a little bit leery of this bounce, and I want to show you something that's very interesting. I got a lot of indicators on my screen here. You can see the 2018 open price, which is going to be our S1 going into next week, which is our first level of major support. It's the psychological barrier of 26.75.25, which fits in sort of with an expected move the markets are pricing in. Keep in mind the U.S. markets are going to be closed on Monday. It's the President's holiday. Monday's a holiday rather, and then we pick it up on Tuesday. Markets will open, the futures markets will be open Sunday night, and they'll close on Monday and then open back up Monday evening. But you can see this rip that we've had right here, a very strong move up higher like this. And what I've been telling all of my members is this is an eerily similar to what we had in the summer or February of 2016. And if you can see here, this right here, about a 7.71% move up off the bottom, right? In this case, it was about 195 points. Notice it puts us right at that area there, which is a key level, 27.2675. Now, what is this? This was the exact move higher, the bounce that we had in February of 2016. I watched it because I was trading it. And if we come back over to February 2016, and I'll show you exactly how that thing played out here. And you can watch and see with this move right here. In fact, during this time here, this was not as bad volatility-wise, because you can see here, we had a high, a little bit of a lower high, and then we attempted to maintain it, but we just rolled over. Right? And we kept getting the divergences here. So we had heads up that this was coming, and we were able to get basically flat. And then by the time we broke this area here, then we were down. But notice the move down lower, 14.65%. This one here over the past week was 10%. Now, volatility here was nowhere near the goose that we had 2 weeks ago. It was the highest pop in volatility in the history of the markets in the shortest period of time. But now notice this counter trend move here, right? We hit this bottom, we came down and we did a retest, all right? Now pay attention to this right here. It's important. Markets are very symmetrical. We had this move down, and it took about a week, about 7 trading days, and we moved up about 7.71%. Now here the markets were not as high, so it was only 138 points, roughly, give or take a couple. But percentage-wise, we moved up about 7.7%, a counter trend move up. And then from this move higher here, we rolled right back over. And on that rollover, it was almost about the same amount of time, about 7 or 8 days. So this rollover here, then we had a test here. And then notice we had a divergence here. And this was when I told everybody, let's get long. And then you can see that level there. I said, if we get up to this area here, I didn't know if we were going to broach it or not. And we got up there and we spent one solid week there trying to clear it. When we finally cleared it, we moved. Okay. And I got everybody long here, and then we were tightening stops here, and then we added long here. Now the markets are going to change a little bit, but I want you to pay attention to this, because the markets in this instance here, just when everybody thought, Okay, everything is all good. We're ripping up higher just like this. Here we go. Here's the move higher. And then boom, we gave it all up in almost the same period of time. All right. So each one of these was about the same time that it took. We actually made a new low and then we started to rip higher. Now, is that going to happen this time? Well, it's hard to tell. But you do get a lot of this symmetry in here because fear and greed plays itself out. So if I were to extend the same percentages, the points are a little bit different because we're higher, but the percentages stay roughly the same. And that puts us right here, right at that area here. This is where we're most susceptible to a rollover. If we blow through 2018 and keep going lower, then the odds dramatically favor a retest of this low. And actually, it would probably be better for the markets. It'd probably give us a MACD. In fact, this MACD hadn't even had a chance. This rip was so strong up, hadn't really had a chance to give us a better formation here, which would give us a bullish divergence. That is what I'm expecting. In fact, I'm expecting us to run into some issues right up into this area right here. All right, right up in that area, which incorporates the open price. Now, are we going to make new highs? I think we may before the end of the year, but then I think towards the end of the year it's going to get a little bit more ugly. I think this is going to probably come back, certainly retest the 2018. We may break it and come down here. I can't tell you if we're going to come down and test this here. Folks, remember, this move lower here was not as much about bad fundamentals in the equity markets, bad earnings, corporate earnings, fear of a recession, none of that. All of this was brought on by, I believe, higher volatility brought on by everybody piled into the short trade in vol futures. And then it just caused volatility to get out of whack, and it really spiked vol futures. And then as soon as that happened, vol just took off, and then the markets rolled over. And I think the markets were looking for a reason to roll over anyway. Now, the other thing that is the fear here is interest rates. Now, notice we've been moving up. I think the markets are more accepting of higher interest rates. And if you think about it, we're not quite at 3% yet. We're going to get there. I was telling our members that's where we're headed. I don't think that in and of itself is bad for the markets. In fact, higher interest rates can be bullish for the markets up to about 3.5%, maybe just slightly under 4%. Then you're going to have debt compete with equity for money. All right. For now, no. But what concerned the markets was the speed, not the distance, but the speed of the interest rate movement. So this is what I'm looking at right now, and this is what make sure you mark your 2018 open price. You can see all this volume over price right here, like this, which puts us right in the middle of the open price for the year. So I think this will be our S1 value going into the short holiday trading week next week. I would be totally surprised if this move here, we don't get some break of that trend and some move back here. In fact, if we go a little bit higher without any kind of break, then I would start loading up on the shorts again. In fact, if the minute I see it start to roll, I'm going to start rolling in on the shorts because I'm expecting this to come down and test this and possibly come back down into this area down here. Will we get down here? I don't know. But I do expect a little bit of a break this short week here. Now, if we look at interest rates, you can see here on interest rates just where we've gone, right? This is the 10-year. And if I were to take it out and put it on a weekly, and I was telling you guys in our weekly update several weeks ago, said, watch this. This has got me concerned. We can really start to move this out. This goes all the way back to 1994. And you can see that's a clear trend line break right there. You can see this shaded zone there, which puts us right in the middle of 3%. All right. You can see how it's formed. You can see the heavy duty resistance. And I think what's going to happen, as I told our members, we'll probably come up here and chop a little bit, and we're going to sit in this area for a while. Okay. The next level up is right there. I do not think we will get there at this point in time. I do believe we'll eventually get up there towards the end of this year. And then that is going to be the the precipice to move the equity markets much lower, possibly into a recession or into a bear market. For now, I think the equity markets will pull back a little bit, catch their breath, and then we'll move up higher. But this is where everything is starting from, right here. Okay. And typically you're going to see interest rates, because the dynamic of the market has changed. The macro narrative of the market has changed from 0% no inflation. The money only has one place to go, into equities, to now we're getting inflation on the front burner. We're now introducing volatility back into the markets, which we have never had any over the past decade almost, except for a couple of bouts, 4 times, actually 5 times over the past 10 years. So this is kind of what I'm looking at right here. And if we look at volatility, let's look at the VIX. You can see the VIX actually kind of creeped a little bit higher today. Let's put it on a daily chart right here. And you can see on this daily chart, if I back it out a little bit, you can see where we're sitting here. All right. I've got my zones colored. It helps us with strategies and things and just where the VIX is. And you can see we're now in the yellow zone. I think we're going to, as I said before, we can stay in the yellow zone for about 3 months. We're going to have, even with the markets ripping higher this week, vol stayed at this constant level here around 17.5 to about 20. We've stayed here. I think we're going to stay here a little bit longer. So this is kind of what I'm looking at with the markets for the coming short holiday week. So this next week is going to be real interesting. It's going to probably dictate our key pivot points, a little bit of a pullback. Where do we form our new lows? So I'm going to watch this very closely. For our members, I will see you this Sunday night for our weekly market watch. Monday's a holiday, but we'll pick it back up Wednesday. If you are a non-member, I highly encourage you to come in. We're having a lot of fun this year in the markets, and I see some great opportunities coming up here for us, shifting over from different kinds of strategies based on what volatility is going to give us and what the skew is going to give us, not only vertical but horizontal. All right, everybody. And also, we've got our Option Masters education series running right now. If you're not a part of it, I really encourage you to jump in. We got a ton of people in. It's a global market place of folks that are attending from Asian Pacific, Latin American markets, North American and European markets, even Eastern European and South African markets. Come on in, join us. It's a lot of fun. Otherwise, everybody have a great long holiday weekend, and members, I will see you Sunday night. Take care, folks. Ciao.